You're on board KCAA's Inland Talk Express. KCAA, Loma Linda, 1050 AM, the station that leaves no listener behind.
I want to welcome everybody to the Real Men of Real Estate. My name is Dan Reddig. I am owner and operator of Merlin Home Buyers here in San Diego. We are found live 1 p.m. every third Sunday on KCAA Radio out of Redlands. You can also look us up and find the live stream. So today with me, I've got Rob Overstreet, who's been working in multifamily apartment investing for a number of years. I think it's a fascinating time with the changes in economy, money printing, everything else that's been going on to kind of take a look at this asset class and do a deeper dive. So Rob, thanks for being here.
Thanks, Dan. It's a pleasure to be here. Excited to dive in.
Awesome. So you've been at this for a while. Would you just share with me a little bit, kind of how did you get started? What got you looking at this asset class?
Yeah, thank you. So my company is Harbor Drive Holdings, LLC. We're based in San Diego. However, we don't invest in California. All of our holdings are all outside of California. We're in Texas, we're in Indiana, Oklahoma, Arkansas, Ohio. And
wow,
so
that's pretty diverse.
Yeah. So it's out of state. I travel quite a bit, Dan, as we discussed, I'll be on a plane in a couple of days. So
it sounds like an exciting trip.
Yeah. Thank you. So I got started in the business probably 8 years ago. And, like some of your listeners, or maybe none of them, I don't know, it just started with some baby steps. And I'll back up a little bit further. I've been in San Diego about 20 years.
Okay.
I went to San Diego State. I studied economics. I met my wife there. And we just never left. We've always been in Southern California. She's from Orange County. I'm from Imperial County. If anyone's heard of that place, it's a very rural, very agriculture industry driven area just east of San Diego, a couple of hours. But
that's how I know
it. Yeah. Hot summers, right? It's like 120 degrees in July. So
I love that. Actually, I'm a desert rat, so
yeah,
it works for me.
Yeah, no, it's fun. Yeah, I've been in San Diego 20 years. After college, I got involved. Actually, I should say during school, I was working in the hospitality business. So
interesting.
I worked for Ruth's Chris Steakhouse.
Okay,
it's a national
That's
brand.
A good one.
It's a restaurant chain. And I worked there for a lot of years. And during college, it was great. I'd work at night. It was good money. When I was 20 years old or whatever. And
sure.
Had my days off so I could go to school and do whatever I want and everything else. And had opportunities while I was there to advance with the company, graduated college. The company went public. They were sending me on assignment to various cities to help open because they were expanding.
Wow.
They were opening.
It sounds like you kind of climbed the chain there.
Yeah. And so, and there were opportunities to advance in management, but I've always been deep in my pit of my stomach an entrepreneur at heart. And, unless Ruth's
break
Chris,
those chains.
Yeah. And so, unless Ruth's Chris was going to be called Rob's Chris, I always wanted something else, right? Something more. Right. I wanted to be in business for myself. So
I can appreciate that a lot. I'm chasing the same.
Yep.
Yeah, that's amazing.
Yep. So I started looking at different opportunities. I went to a franchise expo in San Diego and just looking to network with folks in business. And I came across an opportunity in the franchise world called Minuteman Press. So,
interesting.
Yeah. And so I started doing my due diligence and, eventually made the decision that I was going to buy a franchise. And so I purchased a Minuteman Press franchise here in San Diego, and I operated that business for a lot of years. We grew sales and everything else, but that was very brick and mortar. And once again,
Yeah.
I found myself in a position of trading time for money, you know,
Very uncomfortable position to be in.
yeah, you know, and it was a great opportunity. I mean, and it's a fantastic franchise, and I really learned a lot. I, you know, had a full staff and you know, a storefront, and we were in production of print
Wow.
and promo products and everything else.
That's an
But
incredible operation, Rob.
yeah, yeah,
Wow.
and so but once again, I found myself looking for, you know, alternative, you know, opportunities to produce passive income streams. And so um, you know, during my tenure as a franchise owner, I started to learn and educate myself on real estate. And I started going to conferences. I started listening to podcasts. I started listening to shows just like this one, Dan, and
Fantastic.
really and really getting, you know, myself educated in the space and just taking those baby steps. And so, you know, a bunch of years ago, I was at a conference, a real estate conference, a weekend event, you know, looking for education, looking for networking opportunities. I found my first, what eventually became my very first mentor. And we began to look at deals together. We began to underwrite deals together. And they had some experience already, and so they'd already successfully transacted several times, you know, previous. Started putting offers on deals together, and eventually syndicated our first apartment deal. That was an 80-unit deal in Dallas, Texas, and that was in 2015 or so. And so that was my first real taste in the space. You know, I to this day I've still never flipped a house. We just jumped into apartment real estate. And from that one, we closed and syndicated on a 132 unit deal in Ohio about 6 months later, Cincinnati specifically. And then about another 6 months after that, we did a 120 unit deal in South Indianapolis, a suburb called Beech Grove. And so, you know, really at that point, Dan, I was bit by the bug. I was still working in my franchise business, but my obligations to my day job, you know, franchise owner, and my, you know, growing real estate business were kind of tugging at opposite ends of each other. Right?
I can see them being definitely at odds. Yeah, absolutely. Yeah.
It was a little bit of a conflict. And so probably about 5 or 6 years ago, with my wife, we decided that I would sell my franchise business and focus exclusively on the real estate. And so I've been full-time in the space ever since. And since then, we've closed on several more, you know, apartment deals in the meantime.
So like so many other entrepreneurs I know who are getting into real estate, they seem to kind of be able to jump in and do things. And it really sounds like your experience with Ruth Chris's and the Minuteman Press franchise you had really set you up to understand value propositions and business operations, leadership. You know, in our past conversations, you know, it struck me very much that you have that stuff. Is that, what else was there to that?
Yeah, learning lessons each step of the way. You know, I tell people a lot that during my, you know, 8 or 9 year tenure at Ruth's Chris, I got my PhD in hospitality and communication, right? And you know, Dan, you know, being in the business, this is a people business. This 100%. Is a very relationship driven. And so, you know, when I started at Ruth's Chris as a busboy, and then, you know, worked various jobs and, you know, eventually corporate training or whatever, you know, years later, it was all about the experience, and it was all about the communication for the client, which were the diners that would come in to enjoy our restaurant, right? And so I tell people all the time, I got a PhD in hospitality and communication. You know, I learned how to read people, how to communicate with people, understand their needs, you know, and a lot of those.
Incredibly valuable in negotiating. My gosh, wow.
Absolutely, Dan. And, you know, especially when we're talking with investors, you know, we have a pretty good investor group behind us that, you know, we communicate with, we educate, and that communication skill, I mean, it's deeply ingrained, and it's part of our everyday, you know, business today. So,
wow.
Yeah,
that's incredible. So, I mean, with that, so you've been doing this for a while. This takes care of the family. This takes care of the needs. So, what's kind of the general business structure you have at this point?
Yeah. So I have a business partner. And, by the way, each of these deals, there could be a variation of different business partners. And, each one is structured in a different way. But basically what we do today is, and I tell people this a lot, the lowest common denominator in apartment syndication and apartment investing is deal flow and investor flow, right?
Okay.
There's multiple layers above that where, I'm on the asset management calls. I was on a couple calls this morning with our kind of weekly check-ins, make sure the operations are good and everybody's, following the business model. But the two lowest common denominators are find a new investor and find a new deal, right? And match the two.
Yeah, absolutely. So, I spend most of my spare time on that.
Yeah. So, those are the, as far as operationally goes, again, there's layers above that, but those are the two, if you really, distill it down to its core, it's find, a quality deal, a good investment quality, investment, and provide it to our growing investor community, and offer it for them as an opportunity to add multifamily exposure to their portfolio. So,
all right, that's pretty fantastic. So, with that, the get to here, was there anything that kind of made the difference?
The gift of here.
Just getting to this point, was there any particular thing that you felt like was kind of, with all your skills and experience, you have a lot that really works towards this. Was there a gimme?
To get to here? No, there was no handouts, no gimmies. It took blood, sweat, tears, and I would say, Dan, more tears than blood and sweat.
Wow.
You got to roll with the punches in this business. We've got stories. I could probably write a book in the last 8 years about, some of the trials and tribulations, but
wow.
Yeah,
right.
no handouts.
Well, we'll talk more about that in a little bit.
Yeah.
We've got to cut to commercial right now, but with the Real Men of Real Estate, we are coming back to you here in a couple of minutes and talk to you all soon.
I love how New School is able to help me greatly with my career,
because they actually have experience working in the field.
The greatest thing about New School is the fact that there are so many different disciplines, which allows you to really understand and get a good insight into different types of design. And I think it's that whole changing mindset of what design can really do for a city, and this is kind of the place to be.
This environment cultivates creative thinking.
Real Men of Real Estate with Steve Matley, construction manager and real estate developer, business owner, and educator.
Did you know that right now there's 22,000 units deficit?
Tunde Ogunwale, real estate development professional, Naval Academy grad, and veteran with a deep understanding of the public sector process.
All of us want to live in thriving communities.
Brian Fox, real estate expert and investor, dedicated to helping hundreds of clients make money in real estate every year.
There's so much housing going in.
The builders are begging for more land.
Future company can come in, lease up space to employ those people who are living in the homes.
We have to put the housing in place.
That we either have to have houses.
They want to make sure that there's a strong employment.
Logistics centers, things like information hubs. We are a shipping economy now. There's economies all over the country where their prices are doubling and tripling.
FireUp Connect is the most innovative business networking group, supporting and collaborating with a dozen of small businesses that are interested in building and establishing strong business connections, hosting educational live seminars while carrying out business and community-driven projects, as well as marketing programs as a part of its membership program. FireUp Connect also offers virtual assistance with a wide range of services including inbound customer support, chat support, appointment setting and email management, graphic designing, video editing, web design and development, social media marketing, e-commerce solution, content writing and much more. For more information, head on over to www.fireupconnect.com. FireUp Connect, helping success stories unfold every day.
And welcome back to the Real Men of Real Estate here on KCAA Radio. You can find it on 102.3 FM or 1050 AM out of Redlands, Loma Linda area. I've been talking with Rob Overstreet about his journey in multifamily investing. And so we've kind of covered the how you got here and what it means to you a little bit. Getting into this kind of the dirt, I guess, the economics. There's a lot going on. You know, so much going on in politics right now, so much changing the way we're handling things now post-COVID. What's the kind of general outlook that you have of the asset class right now?
Yeah, our outlook is bullish, you know, but there's so many influencing factors, Dan, as you kind of alluded to. And
yeah.
I'll start by, and I'm sure many of your listeners know about, you know, cap rates as a measure of value of apartment deals and other commercial asset classes, office, industrial,
for
retail.
Maybe some of the new listeners, what is a cap rate real quick?
Yeah, cap rate is a measure of yield, unlevered yield. So basically you have all of your income, right? So your total collected income minus all of your total expenses, your operating costs, including payroll, repairs and maintenance, you know, all the usual
for 1
stuff.
year, right?
Yeah, for a 1 year period. And then, so income minus expenses gives you your net operating income, your NOI. And NOI and purchase price are two of the factors for calculating the cap rate. And so, for example, if I'm looking at a deal that is generating an NOI of, let's say, $100,000, and we can buy that property for $1 million. Okay, $100,000 can go into the purchase price 1 million 10 times. That's a 10% cap rate. Yep. Which, by the way, if any of your listeners have any 10 caps, I would buy all of them off of them today. So, you know,
I think everyone would. Absolutely.
Yeah, that's an exceptional yield. But in my, you know, day to day, you know, week to week, you know, on the phone with brokers, I mean, we're always talking about the cap rate. What's the cap rate? What's the cap rate trading at? What's the cap tomorrow, this day, that day, whatever. And so in today's world, so backing up, generally speaking, the lower the cap rate, the higher the price of the real estate. Okay. The higher the cap rate, the lower the price. Okay. So it's kind of inverse there. Again, measure of unlevered yield. It doesn't factor in, you know, your debt service payment. Right. And so a couple of years ago, you know, in some of the markets that we're looking in, we could find 6-7% cap rates,
right?
You know, in decent areas, and you know, those were good deals. And cap rates, by the way, are always in flux. They're always going up, they're going down, sideways. You know, and it's all, you know, there's more to it. It's also a function of risk. You know, you could have the same city, but the bad neighborhood might be selling for an 8 cap, meaning the real estate costs less, versus the downtown prime main location might be selling for a 3 cap, which is, you know, less risky. Right. And so the risk factor plays into the cap rate as well. But
so what's driving that then? The risk factor specifically, what's driving the risk factor for you today?
Well, people's opinion, you know, everyone knows on this side of the tracks or the other side of the tracks, you know, it's like, you know, that's a little bit heavier, you know, lift, or maybe it's a rougher area. And so, you know, investors respond to that, the buyers, right? And so it factors into the cap rate. But on top of all of that, you know, that's on the micro level. There's also macro level influences into cap rates, not only market to market, city to city, but also on a national level. So a couple of years ago, you know, in some of the markets that we look in, you know, we could find a 6 cap or 7 cap, and you know, that's a pretty good deal, and it's a good yield. We can pay our investors the cash flow, and you know, if the deal had a story to it, we can add some value and appreciate the deal based on our operations. Today, nationally, cap rates have been declining steadily. And really it started since the last kind of, I'll call it the financial meltdown of 08 and 09. Cap rates went up, and ever since, call it 2010, cap rates nationally have been on a steady decline, meaning the prices of real estate have been going up for commercial. Okay. And so, you know, we would pass on deals a few years ago at a 5 or 6 or 7 cap that today are trading at, you know, 3 to 4% cap rates in some of the markets.
Oh, wow.
And so to put numbers on that,
that's pretty quick change.
Very quick change.
Wow.
And there's a lot of factors that are contributing to that. Cap rates historically kind of, they follow and they have a positive correlation with the direction of treasury rates, right? Interest rates.
Mm-hmm.
And so interest rates have been on the decline over that same period. And so have cap rates. You know, if we can borrow money at cheap rates, we can afford to pay more. And so it's driving down cap rates, right? But my point here is I wish for all those 6 and 7 cap rate deals we passed on 4 or 5 years ago, I wish we'd have backed the truck up and bought every single one of them.
Yeah.
Because it would have made so much money. Now, your question was to do with kind of where we are today and where we go from here. I think that there are some contributing factors that suggest that cap rates may continue to decline, at the very least run sideways. Now, some people may argue with me that, well, Rob, Powell, our current Fed chairman, is going to raise rates this year. That's true. I believe that he will. It's pretty much widely known that he's going to raise rates, probably multiple times. That's fine. I would argue that despite interest rate hikes, that at least in the short and medium term, that cap rates stay compressed and don't move very much because of all the liquidity in the monetary system.
Mm-hmm.
They've printed,
there's a lot of money out there. Yeah.
They've printed $5 trillion, Dan, in the last 18 months. And I know
that's an incredible number.
Yeah. And so,
oh, man.
That plays an influence. All that money is looking for yield.
Right.
And so there's a lot of buyers out there. There's a lot of fresh powder, a lot of equity, a lot of people trying to get in the space and protect their investments, and they're using real estate and they're using apartment real estate. And so I believe that unless treasury rates increase at, in a material way, right? If Powell does these little, nickel and dime changes here and there, I don't think that this train stops steaming down the tracks personally.
It's got a lot of momentum.
It's got a lot of momentum. There's a lot of demand, and there's a lot of newly minted money out there that's seeking yield. And I'll take it a step further. If you go to other, I'll call it, established countries, or different cities around the world that are first world, kind of areas, their cap rates are even lower. I mean,
and they have been for a while too.
And they have been for a while. So go talk to an apartment investor who does what I do in London or Toronto or Tokyo or Singapore.
Mm-hmm.
They're buying deals at like a 1 to a 2 cap. So
that
while
sounds unreal.
and so while we all sit around, me, my peers, my competitors, whatever you want to call it, we're all in the US apartment real estate game, complaining about how far caps have compressed. It's still on a global, scale. It's still relatively cheap to buy real estate in the United States.
Mm-hmm. Everybody's coming here to buy stuff. Still.
That's right. So, that's my 2 cents. You talk to 10, commercial real estate economists, 5 of them on this side, 5 of them on that side, they'll disagree. I mean, I listen to and I read articles from a lot of very smart people, much smarter than me, and I digest it all. And I mean, there's brilliant minds that disagree with each other on where this goes from here. Today, I tend to believe that we're going to continue to see low caps, and they may even continue to decrease.
Wow, that's incredible. What are you doing with your strategy then? How have things shifted in the last, say, 3-4 years?
Okay, I just did the whole cap rate speech, and so, and all of that said, if you'd asked me 5 years ago, it was all about the cap rate. Today, cap rate is becoming less relevant. What's becoming more relevant, in my opinion, is the story of the real estate. And that's always been relevant, right? For all those real estate investors out there listening to this right now, that the story matters, right? The location, who owned it, what did they do to it, what can we buy it for? And you've heard it before, you make money when you buy, not when you sell, right? So
just about every time.
So strategies, we look at the basis, what's our going in, price per door, price per pound, price per foot. Does that feel right? Does it compare with, sales comps? But even more than that is, where can we take the deal in the next 1, 2, 3 years? Is there value add, real value add? Because as we talked about with the cap rate, the value of these properties is based on the income that they generate. So we can, quote unquote, force the appreciation if we can identify and solve, a number of issues: low rents, high expenses, some kind of functional obsolescence, where if we can, increase our NOI, again, that formula, NOI, price, and cap rate, for every dollar that we drop to the NOI, we're increasing the value. So now more than ever, it's location and it's story of the deal. Can we execute on our business plan?
Wow. So the same sort of stuff, but you're just compressing into other methods to get there, it sounds like.
Bingo.
Wow.
Yep.
All right. Well, we're at the end of this segment right here. So we'll be back after a couple of commercials here on the Real Men of Real Estate and KCAA Radio out of Redlands.
I love how New School is able to help me greatly with my career.
Because they actually have experience working in the field.
The greatest thing about New School is the fact that there are so many different disciplines, which allows you to really understand and get a good insight into different types of design. And I think it's that whole changing mindset of what design can really do for a city, and this is kind of the place to be.
This environment cultivates creative thinking.
Real Men of Real Estate with Steve Matley, construction manager and real estate developer, business owner, and educator.
Did you know that right now there's 22,000 units deficit?
Tunde Ogunwale, real estate development professional, Naval Academy grad, and veteran with a deep understanding of the public sector process.
All of us want to live in thriving communities.
Brian Fox, real estate expert and investor, dedicated to helping hundreds of clients make money in real estate every year.
There's so much housing going in.
The builders are begging for more land.
Future company can come and lease up space to employ those people who are living in the homes.
We have to put the housing in place.
That we either have to have houses.
They want to make sure that there's a strong employment.
Logistics centers, things like information hubs. We are a shipping economy now. There's economies all over the country where their prices are doubling and tripling.
FireUp Connect is the most innovative business networking group, supporting and collaborating with a dozen of small businesses that are interested in building and establishing strong business connections, hosting educational live seminars while carrying out business and community-driven projects, as well as marketing programs as a part of its membership program. FireUp Connect also offers virtual assistance with a wide range of services including inbound customer support, chat support, appointment setting and email management, graphic designing, video editing, web design and development, social media marketing, e-commerce solution, content writing and much more. For more information, head on over to www.fireupconnect.com. FireUp Connect, helping success stories unfold every day.
All right, welcome back, folks, to the Real Men of Real Estate here on KCAA Radio. I'm talking to Rob Overstreet. After going a little bit through the kind of economics of the situation and where things might go, which always a little nebulous, right?
That's right.
I'd like to get to know just a little bit more about what is the day-to-day, in your business operating this system. How does it work?
Yep. So maybe we can break it down like this, Dan. I can walk your listeners through, how to do a deal, right? So
that'd be fantastic.
And kind of the steps. So as far as the day-to-day goes, again, it boils down to those two lowest common denominators. We're always looking at deals and we're always looking for new investors. So, most of my time is filled with either, underwriting new opportunities and understanding the stories behind them and seeing if it would be a good fit for our company and our investors, right?
The value proposition fits your model effectively.
Exactly. And then the other part of the time is spent, on the phone with investors, answering questions, educating our investors. We have a full investor club where there's a monthly newsletter and things. And
oh, wow. That's fantastic.
Yeah. And, if your listeners are interested, they can check it out at harbordriveholdings.com. There's a link. You can check it out. But so those are the two lowest common denominators. But what happens when we have an accepted offer, right? Like, let's walk through that. So we just had a deal just last week that has an accepted offer. And so we're in like crunch mode now for the next 60 to 90 days, Dan.
Congratulations.
But thank you. I appreciate it. And so, anyways, it starts with the underwriting, right? So broker sends us or seller sends us, a financial statement, a rent roll, any information we can gather. And, we do that kind of early preliminary due diligence. We run the numbers, see if it's a fit for us, if we can pay our investors, the cash flow that they are looking for. And if there's any type of, like we talked about in the last segment, that value proposition, right? So that's the first kind of sniff test, right? If it passes, then we will submit what's called a letter of intent, which is a fancy word for an offer, right? So,
it's kind of a proposed offer even, right?
Correct. Yeah. And it has some, some high level terms, the price, the earnest money, what our timeline requirement would be for, due diligence, closing timeline, any extensions, it's a real high, it's an offer, they call it an LOI. So submit the LOI. Presuming that our LOI is accepted, now we're all high-fiving, we got a new deal, but now the real work begins, right? So, the first thing that we do once we have an accepted LOI is, we have to establish a team. There's lots of third-party, people involved with these transactions. We have a real estate contract attorney that is helping represent us against the seller, against the lender. We have a securities attorney that prepares all of the investor documents, which would include the private placement memorandum, which AKA the PPM,
right?
The investor subscription agreement, which is what the investors, kind of fill out to subscribe to this, private offering, operating agreements, et cetera. We contact all of our insurance brokers. We start to organize and schedule our due diligence team, right? Because some of the deals that we're looking at are 100, 150, 200 units. And, that could take a couple of days.
Yeah, that takes a lot of hands to get through that. Wow.
Totally. And so we might have, 12 to 15, due diligence team members. We'll all, pick a day that works for everyone. We show up and we walk every single unit. We do a complete full financial and lease file audit, right? So every single lease file gets touched. We review, we make sure it matches rent rolls. We ask questions, right? And it's a pretty full scope, invasive process, right? I mean, it's a full due diligence. I mean, contractors of every flavor. We have the plumbing guy, we have the roofing guy, the electrician, checking, touching, feeling, all of it, right? Inside and out.
That's incredible. So with that many moving parts, especially the trades, getting everybody there for the same maybe 2, maybe 3 day period. I mean, I'm assuming you must be working this ahead of time to try and set it up, but how does it go really?
That's exactly right. And in this, I guess I would, in competitive environment, sometimes, you need to be working on this stuff even before you have the contract. So for example, we just had an LOI accepted. And so we're going towards the contract. So they've pitched the first draft of the contract to us. And so now our contract attorney, our real estate lawyer that's representing us is reviewing. We're all reviewing the document, but there's so much more going on in the background. I mean, we're talking with our investors already, getting them, prep for this upcoming opportunity. We're talking with our due diligence teams, asking them to clear their calendars. And we're trying to narrow in on, is it going to be Monday or Tuesday, or is it going to be Thursday or Friday? And which week, we're looking at a week or two from now, like when can we get there? And we're trying to anticipate when the contract will be finished and we'll have a quote unquote effective date, right? So there's a little bit of kind of educated guessing involved.
Uh-huh.
You know, simultaneously, we're working with our cost segregation expert to run a cost seg study on the deal so that all of our investors get that.
Would you explain cost segregation to the audience?
Yeah.
I think that's something that a lot of people don't know about, and especially folks, if you're out there doing something with single family, cost seg is not something that most people I've talked to have heard about. I think it's really valuable.
Absolutely. That I'm glad you brought it up, and this is one of the huge benefits to our investors that come along for the ride in any one of our projects, is that we'll conduct a cost segregation study. And what that is it basically it allows us to accelerate the depreciation, right, of the real estate, because all of our hold periods are 3 to 5 years, you know, plus or minus, right? So the investors understand that, you know, they're going to get cash flow, but it's, you know, one of the risks is liquidity, right? So when you invest, it's understood that it's going to be very difficult, if at all, to pull your original investment out of the deal. However, you're going to get, you know, cash flow and other benefits, as well as accelerated depreciation. So the cost segregation study allows us, per the IRS, to basically compress the 27.5-year depreciation schedule under a normal real estate deal into a much shorter time frame, because we don't anticipate holding the deal for 27.5 years. Investors want their money back, right? And so we can depreciate some of the quote unquote personal property at a much more accelerated pace, which benefits the investors in the early years of the hold period to offset some of their other qualifying income. Now, I'm not an accountant. Yeah, exactly. And so what it means is our investors in our deals get cash flow, and they're essentially tax-free, or in some cases showing a loss, paper loss, that can be applied to other passive income or qualifying income sources. Okay.
The power of real estate right there.
Yep. This is about the time that I should say that I'm not an attorney. I'm not an accountant. Please don't take my advice. Don't listen to anything that I say, right? My attorneys, my accountants will ask me to say that, but you can see the idea here. There's a lot of power, as you know, investing into this, especially when you take advantage of some of these depreciations. So, you know, we'll take, in a cost segregation study, every, you know, appliance on the property, all the carpeting, all the electrical, you know, fixtures, plumbing fixtures, everything, because those things aren't going to last 30 years. Right. No, and so, you know,
they depreciate something like 5 to 7 years, and like landscaping is 15, I think, or something like that.
Bingo. So we take all that 30 years of depreciation under normal conditions and compress it into the first like 3 years. And it's a huge benefit to investors, especially investors that may have realized a significant gain, passive income gain over the last year, and they want to kind of shelter some of those taxes.
Hopefully that's a lot of you guys out there.
Yeah. But
that's fantastic.
So
yeah, getting back to it. So you do the cost seg study, and you're moving through the rest of the inspections, and
all the moving parts, secure the loan. We announce to our investors, we host webinars, answer questions, you know, offer the opportunity to our investing, you know, community, and raise the funds and close on the deal. So that's a Cliff's Notes version of,
so much going on.
It takes. Yeah, there's a lot of moving parts, and believe me, Dan, it takes a village to close one of these things. I mean,
I knew it was a big team, but this is actually more than I expected, to be honest. Wow.
Yeah.
So in the last minute of this segment we have here, you know, how are you finding these deals? What are the mechanisms?
Yeah. So it's the markets that we want to be in. And it's just nurturing relationships. So most of our deals come from brokers. And so, you know, I travel quite a bit. I go to the market, I shake their hands, I ask how their kids are doing. I mean, this is, it goes back to what we were saying in the first segment of relationships, skills, right?
Yeah.
And so get to know guys. Pretty soon they start showing you some deals. Pretty soon they start showing you some more deals, and then they become off-market deals. And the next thing you know, we're closing on deals, and it just becomes this kind of snowball effect. People can do this, and for your listeners, they can do this right in their own backyard. We've chosen to jump on planes and do it out of state. You know, you can do that, or you can do it right in your own backyard. But it all boils down to getting in bed with the brokers and, you know, just building those relationships, establishing credibility. And that's how the deal started to flow in my experience.
No, that's a really common story, and I'm working on something similar myself, so I appreciate it. Just not quite at the same scale you are. That's incredible. You're able to operate that way across the country with a team like that. I'm impressed. Wow.
Yeah.
Wow. Well, with that, this segment is going to wrap here. We're going to go to commercial break, folks. But thank you for listening. I hope you're as interested as I am. I think this is an amazing topic, and some of the details that Rob is getting into here are really amazing. So you can catch us here at 102.3 FM, 1050 AM on KCAA radio out of Redlands.
I love how New School is able to help me greatly with my career.
Because they actually have experience working in the field.
The greatest thing about New School is the fact that there are so many different disciplines, which allows you to really understand and get a good insight into different types of design. And I think it's that whole changing mindset of what design can really do for a city, and this is kind of the place to be.
This environment cultivates creative thinking.
Real Men of Real Estate with Steve Matley, construction manager and real estate developer, business owner, and educator.
Did you know that right now there's 22,000 units deficit?
Tunde Ogunwale, real estate development professional, Naval Academy grad, and veteran with a deep understanding of the public sector process.
All of us want to live in thriving communities.
Brian Fox, real estate expert and investor, dedicated to helping hundreds of clients make money in real estate every year.
There's so much housing going in.
The builders are begging for more land.
Future company can come in, lease up space to employ those people who are living in the homes.
We have to put the housing in place.
That either we either have to have houses,
They want to make sure that there's a strong employment.
logistics centers, things like information hubs. We are a shipping economy now. There's economies all over the country where their prices are doubling and tripling.
FireUp Connect is the most innovative business networking group, supporting and collaborating with a dozen of small businesses that are interested in building and establishing strong business connections, hosting educational live seminars while carrying out business and community-driven projects, as well as marketing programs as a part of its membership program. FireUp Connect also offers virtual assistance with a wide range of services including inbound customer support, chat support, appointment setting and email management, graphic designing, video editing, web design and development, social media marketing, e-commerce solution, content writing and much more. For more information, head on over to www.fireupconnect.com. FireUp Connect, helping success stories unfold every day.
Hey everyone, welcome back to the Real Men of Real Estate. My name is Dan Reddig. I'm here with Rob Overstreet talking about multifamily. So Rob, we've kind of gone through the economics and how the day-to-day works and all, the ins and outs of some of this stuff. So what's next? You're doing these deals. Where are you trying to take this?
Yeah, Dan, great question. For us at the moment, we're just trying to look for good opportunities to bring to our investors. The appetite from our investor community is very high, and we pass on more deals, far more deals than we pursue. So really, we're looking for kind of needles and haystacks, right? I mean, for each deal we do, it's probably because we've underwritten anywhere from 100 to 200 unit,
oh wow, that many
deals behind that, right?
Wow.
That we've passed on all of them, or maybe submitted a couple of offers, but it gets out of hand and we just move along. So
how often do you actually get out to the properties before you have to, and you've made that commitment and resources it doesn't come back to you?
Yeah.
Do you have to pull out?
Yeah, there's some cost to doing business. I've traveled so many times on deals that have gone nowhere, but we've gotten more efficient about, at least knowing if we have a chance or not. And again, that comes back to, the relationships, right? I mean, brokers that we do business with on an ongoing and regular basis, they'll tell us like, listen, you should really get down here and make sure this is what you're looking for. Or, hey, you have a real shot here, based on some conversations that we've had on a preliminary basis. And so, you or someone from your team needs to come down here and, check it out. So there've been fewer
so really
wasted trips.
Leaning on relationships, though. The theme here is really the relationship.
That's right.
Okay.
That's right. And there've been cases too where we've submitted offers and we're like, man, if they accept this, then I'll jump on a plane tomorrow, and it's worked. It's like, hey, we like your offer. Let's talk about it. It's like, I'll see you tomorrow, like
Wow,
I'll
that's
fly
incredible.
I'll fly to Indianapolis, and let's break bread over it. Right. But, what's next? Just continue to look for high quality investment grade properties to invest in, continue to provide those opportunities to our investors. On the investor side, it's just about continuing to educate our community, right? And other communities that I'm involved in, Dan, like the one that you and I are mutually associated with in San Diego, the SDCIA, starting to do some multifamily trainings and things. And so, anyone interested and you want to come to San Diego and check us out, reach out to Dan or myself. I mean, come and join us. You can
find us. Yeah, find us at sdcia.com. We have a lot going on. It's a not-for-profit investor group where we get everybody together to make these things happen. And if you don't know where to start, or you're looking for some folks to invest with, it's a great place to meet folks. Still, do your due diligence though. It's up to you.
Absolutely. But it's a great group, and I like, Dan, the direction you're taking it with these subgroups and things, and so I'm honored, that you approached me to be the multifamily chairman of the multi-housing subgroup. And so we're going to start doing some sidebar, trainings and networking and things. So if you're interested, just reach out to Dan or myself, go check out the website. But beyond that, it's business, it's family. I'm married. I have 2 kids. We live in San Diego. My daughter's 6. My son is 2. So they keep us pretty busy. They keep us on our toes.
That's a full life, especially with the unplanned trips out of state to check out a property. Wow.
That's right. Yeah.
Sounds like you've got things working pretty well and the family's on board.
Yep. That's right.
Wow.
So, between, if there's any time left, between work and family, we like to go camping. We like to do things, or, I'm big into the water sports. So I surf a little bit. I'm involved
fantastic.
in racing sailboats, in San Diego. So we do some fun stuff with my crew on a boat that I've been racing on for a couple of years. So.
Oh, that's amazing. I love the water myself. Wow. How did you get involved in that, by the way?
That started in college. I took a sailing class and I liked it, and I started sailing some more and sailing some more. And then, during my time with the franchise business, one of our clients said, "Hey, you like to sail?" And I said, "Yeah, I love sailing, but I was just a casual sailor at the time." He said, "Hey, I'm a part owner on this race boat in San Diego."
Wow.
And it was a 40-foot express, with a 10-person crew. He said, "Why don't you come down? You know what you're doing, right?" I said, "Sure." And so I show up for the first race, and it was like I knew nothing about sailing. I mean, it's a totally different language. On the racing side, it's like intense. There's, lots of yelling, like everyone's
it's a bit frantic.
And you're using the full like sailing lingo, which before I was more of a casual sailor. So I'd be like, pull that line, or we're going to turn right, no, it's on the race boat. It's, starboard and port, it's jibe, it's tack, it's windward, leeward, and all the lines have names, and it's like speaking Mandarin. Right. And so I had to learn by fire quickly, but it's exhilarating. It's a lot of fun. And by the way, and this is a tip too, if you're out there, raising money for real estate or, your projects, it's a great lead for investors. A lot of my sailing friends have become some of our best investors in our deals, so use your hobbies, and it doesn't have to be sailing. If you like to golf, if you like to coach your, kids' little league, or, play tennis,
just tell people what you're doing.
Hiking. Yeah. And just talking about what you're doing. And by having that common interest, naturally, it just procures itself to leading you to, new investors. I mean, I talk about what I do to everybody that'll listen to me. So
that's fantastic. You have to start the Apartment Brokers Sailing Club.
That's right. Yeah. Yeah.
Wow. Well, Rob, we're winding down in this segment. How can people get a hold of you?
Yeah. Thank you, Dan. People can go check out our website. It's harbordriveholdings.com.
Okay.
And there's some cool resources on there. There's some videos, some education. It's also an opportunity if anyone's interested in learning more about our investor club and, which has some additional resources. People can email me too. It's rob@harbordriveholdings.com. And then I'm on the social channels. Check me out on LinkedIn, on Instagram, Facebook, whatever. So.
Okay. Wow. Well, that's absolutely fantastic. Thanks so much. I know there's so much more for me to learn about it. I really enjoyed hearing a lot more about how you're doing it, what you're doing it. Even though these deals are huge, it kind of makes me realize just how possible it is. I could go from the flipping wholesaling world and jump into maybe some small apartment deals without stretching too far.
That's right.
Yeah.
That's right.
It's pretty fantastic.
Yeah.
Well, thanks so much for being here. It's a pleasure. Look forward to our next conversation, whenever that is, hopefully soon. And everyone, thanks for listening today. I'm Dan Rettig here with Rob Overstreet on the Real Men of Real Estate. And we hope to see you next time here, third Sunday, 1 p.m.
Pleasure was mine, Dan. Thanks so much for having me.
You're welcome. Thanks, Rob.
The most diversified radio station on the dial, KCAA.
This segment is sponsored by PressPrint, Southern California's best full-service union printer and mail house. They offer the lowest prices around with unmatched service and reliability and free delivery throughout SoCal. PressPrint can print anything from letterhead, business cards, and campaign literature to mailers of any size, lawn signs, banners, door hangers, or just about anything